At the time, this felt like a perfect entry, with all the confluences working in my favor. But when it played out, it failed instantly. My name is Vine. I document every live trade I take and every backtest I run, win or loss, as I work towards consistent profitability using market structure, liquidity, and price action analysis. In this video, I'll break down this live trade I took on Micro Dow Jones futures that I felt had a clean setup in real time, but turned out to be a loss. And more importantly, why I shouldn't have taken the trade in the first place. We'll go through the higher time frame context, the lower time frame entry model, and the key detail that I missed. Okay, so we've turned the clock back and we're on the 15-minute here. We can see that we have a swing high and a swing low on the 15-minute external. So we are bearish on the external. However, we've been pulling back for a few days now and are currently trading within this bullish internal trading zone where we have our swing low and our swing high. If we zoom in further, we can see that we've been chipping away at this fair value gap that was created seemingly by a very major news event on Monday earlier in the week. We've tapped into it and moved out and continued to play with this fair value gap for some time now. And as we come out of London session, which is represented by the orange box, we are moving bearish further into the zone. And so as New York session begins, what we're looking for is a lower time frame confirmation that enough buyers have stepped into this area to move price up once again and be part of that move. If we zoom into the price action, we can see the move down better here. Since this is a futures account, I don't start my trading until 9:30 a.m. Eastern when markets officially open. So if we move time forward to that point, we'll see what kind of price action we're looking at. Here at 9:30, we see the aggressive move down where sellers have come in at the open and moved price. It's at this point that I would observe price action to see if we can get a 1-minute market structure shift to the upside, indicating that buyers have finally stepped in. We'll drop down to the 1 minute to see if we can observe that price action. Here on the 1 minute, we can see the aggressive move down in more detail. For me, I'm identifying this as a key level that buyers need to break above in order to show me that they have enough strength to move price further up. Let's play price forward to see what happens. We can see that buyers are starting to step in, but those sellers step in stronger and continue to push price forward. This is why it's so important to pick a level that makes sense and isn't too aggressive so that we don't get stopped out too early. At this point, I would move my key barrier down to this level, which is the new high that's been created, since it is what helped create the new low in this 1-minute market structure. Continue playing price forward to see what happens. After some price ranging action, we can see that around 11:30, we finally get the move above and we are able to close price above the key level that we had targeted. That's our signal to find an entry. We can do so on the 5-minute, as we always do, to see what we can find. Here on the 5-minute, there's nothing obvious. And so I would typically bounce around the time frames to see if I can identify a fair value gap. And finally, here on the 3-minute, we get just that. And so I can place my entry at the top of the fair value gap and place my stops just below the low. I'll set a 3R target, which takes me into this 5-minute fair value gap here that was created during London session. I can always manage by taking partials and extending my take profit later on if price moves in my favor. But for now, we'll set it up for 3R. We'll play price forward to see what happens. We can see that price eventually does give us our entry, but unfortunately keeps in drawdown for quite some time before ultimately taking me out right before 1 p.m. Eastern, resulting in a loss. Now, the key learning here is if I was to zoom in on this price action, we can see by the green bar here that this was our initial 4-hour fair value gap that we were targeting. However, if we notice that around 10 a.m., as we were tracking price and waiting for buyers to show strength, we actually had a 15-minute candle that closed below the bottom border of that 4-hour fair value gap. I'll zoom in to show you what I mean because the details are very small. And you can see that there's probably a pip of a difference in this instance, but it is significant since it shows us that sellers were able to exhaust the entire 4-hour fair value gap. And yes, buyers did show strength and the last buyers in that area were able to move price, which is what gave us our 1-minute market structure shift signal. But they weren't nearly enough to move it further into the areas that we were looking for. And so those same sellers came in and moved price down. Now, eventually we'll see that if we play price forward, they continue moving price down in such a way that actually creates a market structure shift on the external side. And so this was a significant show of strength by sellers. However, the learning again is that we should have taken pause when we observed that sellers had closed below this key fair value gap level. And that should have been a signal to maybe not take the trade here. And so the key lesson is this: details matter before you enter a trade, not just after. And when I went back to review this trade, it was only then that I noticed the key detail that could have saved me from this loss. Seeing that detail would have kept me out of a losing trade. And that's the shift I'm focusing on now. Not just executing setups, but filtering them better. Because avoiding bad trades is just as important as finding the good ones. I'm not a guru. I'm just someone documenting my journey to consistent profitability using market structure, liquidity, and price action analysis. If this breakdown helped you see the charts differently, then subscribe. And if you want to see another trade breakdown from my journal, then click the video right here. Every trade teaches something different, and the next one might show you something you never noticed on the charts before. I'll see you there.